Stock of the day, one of the former darlings of the market, certainly fallen from grace in recent times. Zipp today announced its fourth quarter results for the 3-month period ending 30th of June. Fourth quarter results showed a quarterly revenue of $194 million. That's up 21% this year. Transaction volume for the quarter, $2.3 billion. Revenue margin for the core business improved 8.5%. Henry Jennings from Markets Today, what do you think of the update from Zipp?
I'm not sure, to be honest, Koshi. I think there's something there in Zipp. I know the market hates it because it's come back such a long way, but I just get the feeling there is something more in Zipp that we're kind of missing. I was just doing some numbers before the show, just looking at the average transaction value in the US, which is $185, whereas in Australia it's $83. I'm not sure how significant that is. I guess that the problem with Zipp has been, well, there's been many, but the biggest problem for them at the moment is still this convertible overhang that they have heading into the next couple of years. Now, they have addressed that. Part of the attraction, I guess, is they have been addressing that this year and have made some moves to do that. Let me just shut that up. Have made some moves to address the convertible issue, and that's certainly a positive. Transaction volumes are up. We have seen the US consumer, it's kind of hanging in there. I still think this one that there's something there that the market is missing, and I think that for me it is I wouldn't say it's a buy. It is definitely a nibble if you are a speculative investor. They talk about being well funded. They also talk about sufficient cash and liquidity to support the company. They are talking about cash EBITDA profitability during the first half of next year, which isn't that far away, to be honest. So I think the market has just really hated this one, and it is just showing signs that maybe that hate is misplaced, at least for the short term. The convertible issue still, for me, is the biggest thing. They haven't solved all of the problem there, but they've certainly addressed a lot of that problem. And it just shows, I guess, that problem is addressable. So for me, it is, I guess, a speculative buy.
Okay. Andrew, one of the big things with Zipp is that it's rebuilding its reputation, isn't it, with the markets. And, as Henry was saying, from a business point of view, it was a pretty good update, but is it enough to have that first block of rebuilding the reputation?
Yeah, look, Koshi, you're right. Like the whole buy now, pay later sector's sort of been under a bit of a cloud, hasn't it? You've got individual names that have got particular issues, but if we then take it back a step, and certainly the change in government and what potential changes are coming around buy now, pay later. Are there going to be more stringent credit checks and in an environment where
Zipp say they've always had that. They've been the only one to have credit checks.
Yeah.
Yes, but correct. But
I don't like your tone. Yes, but
respectfully, Koshi, respectfully, David. I would argue that there's going to be a higher level of compliance put on all businesses, and even though you have been sort of applying a certain measure yourself, which might be greater than the rest of your cohort, there's still going to be more compliance pain coming, if I can put it that way. Slower approvals for clients, more cost on onboarding them. Probably the key thing to Henry's point is that short interest, so, the market actually starting to believe their story, short interest is falling. So in other words, people shorting the company, expecting the share price to fall, has dropped significantly. So I guess I'm with Henry. I think this is probably a spec buy, not because I'm a believer in the business or in fact even a believer in the sector. I mean, I think retail remains challenging as well, but sentiment is turning And as we can see with the share price today up about 8%, I think in the short term there might be a little bit of a bounce in this, but it is definitely not an investment. It is a punt.
Okay. So Henry, do you agree with that it would be a short-term bounce, or is this the start? Would you call it the start of the comeback, or do you need a couple more similarly positive updates?
The thing that I really liked about this, I guess, was those US credit loss rates. 0.85% of total transaction value. It was 1.2% in the third quarter of FY23 and 2.7% in the fourth quarter of FY22. So clearly, the company, I guess, to some extent is sacrificing volume and total transaction growth for the sake of improving the credit quality, which I guess goes to the heart of compliance. And if we're going to have further compliance and credit checks on these sorts of companies, which I'm sure is going to happen at some stage, these guys seem already to be doing that and not just taking any Tom, Dick or Harry as far as their Zipp account goes. So I think that for me is important. Larry Diamond's got 55 million reasons to want this to go up. And Peter Gray, who's a lovely guy I interviewed on a podcast, again has many reasons for this to go up. I think the times are changing, to quote Mr.
I must admit,
Mr. Dillon.
Both Larry and Peter, as founders, and it's a founder-led business, which is good. They have a lot of interest there. Andrew, have you seen any buying? You go through the directors' interests, or the founders been buying or selling? Did you notice on this?
I didn't look closely enough, Koshy, so I'll have it. I'll take those homework in the next hour.
Okay, all right, done.